What's up, guys? So we're gonna try to do a risk and reward analysis. So first things first, so what do you want to do when you buy a stock or a coin is like you gotta know your risk and reward and where to buy. So is this a good time to buy? No, because it's in a downtrend. It's 3 red candles in a row. It's a downtrend. So if you could draw this line, let's hypothetically draw this line and go connect to closes. A close is just basically when the price closes on the day. So you look at like 5 minute. So that would be a close. The closing price would be down here. So the whole chart will like at 7 o'clock looks like that. So you can't see anything. You're not gonna know what's going on. Or move the Bollinger Band so you can see. So you don't know what's going on. So you can't predict the price. So this is the 5 minute, this is the 15, this is the 30, this is the 45, the 1 hour, and it depends on where you want to trade. So this is the downtrend, and you don't want to trade downtrend stocks because you're just gonna lose. That's a downtrend. So let's get back to the risk and reward. So there's the long position. So pretend you buy here. That's gonna be your buy, and then your out will be supposedly right here, and you're gonna get 6% profit, and then your loss is gonna be down here, which is like 140. But you can like calculate it. For example, you end this buy at like 100, and your exit strategy is 120, and your out is gonna be 81.78 for your loss. So your risk, you're gonna try to get 20% profit for a loss of 18%, and you have to stick to your plan. So you have to know where your in and outs are. If you don't know where your ins and outs are, then I would not make that trade. So that's the basic principle of stock trading. You gotta know your risk and reward. Let's see, where's my delete? Just delete like that. Let's see, what else? So you can use indicators for your in and outs too. Let me delete. So you can go, I want like EMA or something. Exponential, moving average. So the moving average is like the price for this is like the price of 9 prices within the 1 hour. So that's the average of it, but moving average is weighted a bit differently. And the average, like the average is always like, you know, 10, 10, 10, 10, 9, 9, and you get an average of that, how many times it is. But EMA is like a little bit closer. So with this strategy, you can try like a long term, like 4 hour. So right here would be like a buy because it's kind of breaking it, and then your out will be here. And let's do the profit analysis on this guy with the long position. So you buy here, your stop loss is here, and your out is, where's the out? Yeah, right around here because the line crosses. So basically your profit is all this green stuff, so that'd be like a 3.74%. So you gotta buy around 128 of it. So the profit ratio is 3.2, so this is a very good profit versus risk ratio. And then your out is at 169, and then your buy is at 171, so your out is around 177. So this is a pretty good tool that TradingView has for your profit and loss. So the risk and reward is really good. So it's there's a 3 out of 1 like ratio. That's really good. So you're gonna lose 1% for 3%. So that's a 3 out of 1 ratio. So this is a good trade. So I would take this trade. So basically, let's delete that one. Let's hide this crap. So you can't see it, right? You go, oh, I'm gonna get in. But so how would I get this stuff? I would do basically technical analysis. I'll go, oh, here's the support. because it touches. So that's how I do my support, and then another support will be here. So it's green. And let's do another line. So basically it's all the humps, the top humps and bottom humps. The bottom humps are supports, and the resistance to the top humps, like this red. So these are the resistances. So you basically draw those lines on the tops and bottoms. But I would use like the long position or short position to figure out my ins and outs. And then basically, if I was doing a support and resistance, I would just have these two lines and then go, oh, my in will be probably here, this one. And then my out would be down here. And then I would wait for a profit right here. So I'll draw the long position again. So then my out would be around here. So my risk and reward is 4 to 1. That's really good. Actually, there's a little closer, but I'll take it earlier. So around here. Because most people miss it because it doesn't crash through. But this is more realistic. This is also a very good trade. So you know your risk and reward. So you always gotta have a plan. So you lose this much, you risk this much to lose to gain this. And you do this over and over again. And that's how basically the risk and reward works for trading. You have to calculate it. You could do it with Excel. So there's already made one right here, and then so oh, I buy at 100, I get out at 120, and then my out's at 81. So there's already Excel created for that, target profit calculations. And then you can like calculate how much money you're gonna make in like 60 trades. You go in every single time, like with a maximum amount. So you can be a millionaire if you do 60 trades if you make 20% every single time, if you go all in. But no one really does that in real life. If it does happen, then you're a millionaire with 60 trades. So if you're a very good trader, you could do that. Anyways, this ends my quick tutorial on risk and reward. And thanks for watching, guys. Peace.